and share with you the technical analysis which has practically contributed to taking an active position in these particular stocks. Today's two stocks that we have decided to share and discuss are number one, Vaibhav Global, and the other is VBL, also known as Varun Beverages Limited. So without much delay, let's quickly take a look at whatever is relevant and start with this session. All right, so the first thing first, what I want to show you is this, the sheet which actually helps me determine which stock idea to discuss with you. Last time we've already discussed about Naukri, we've discussed about Goldium earlier. Today we are going to pick up the stocks of Vaibhav Global and VBL. From this list, we have also spoken about Nelco in our previous session. We've also spoken about Jindal Steel. MCX is actually one of the stocks on which the stock idea was given in one of these live sessions basis live market analysis, and we've also talked about the performance that was seen in the stock Indus Towers. So like I said, the today's picks are Vaibhav Global and VBL. So Vaibhav Global basically helped us deliver 20% profits in around 97 days of holding, whereas VBL allowed us to deliver around 18% profits in around 39 days. So the focus here is not what profit was on, but the analysis which went behind picking up these stock ideas. So let's quickly pull out the chart of Vaibhav Global and start getting into the analysis. So I'm going to close this one out, and there is another sheet that I need to open. All right. Vaibhav Global, from what I can see, the stock idea was given to the members on the 3rd of August 22. So this is the okay. All right. So we've actually traded in the stock Vaibhav Global twice in recent times. One was on 3rd of August 22 all the way till 31st October. Now you can see that the stock had moved a lot higher, around 33%, and we trailed stop loss, and as in swing trading it usually happens, we end up missing either some of the downs, some of the profit while entering or some of the profit while exiting, because obviously it is not practical to expect that you're going to enter at the lows and exit at the highs. So here we can see we captured 18% out of around 33% of the movement, and in the second instance we captured around from 298 to 320, around 7% in a matter of, let's see how many days, in a matter of 2 weeks. Not bad, I would say. So every swing in the stock market is obviously not possible to play. Sorry, just hold on. So every swing is not profitable. So we have to be very selective about which swings we want to participate in, because a lot of times, even though the price may be moving, it may be so that the maturity of the movement may not be very good. For instance, these two movements that we participated in on Vaibhav Global, let me remove the drawing so you can see a little bit clearly. Yeah, so these two swings, one swing was here and the other swing was here, that we participated. The reason why we participated was that there was some indications on the charts which told us very clearly that there is a high probability of an upward movement now versus other times. A lot of times there may be that a swing may be present or an opportunity for long may be present, but the weight of evidences might not support going long in the stock immediately. Okay, so I'm going to bring back the drawings and we will take a look first at the 15-minute time frame and then move higher, or rather let's actually first take a look at the daily time frame and then go lower. So this is the time when we are discussing. As you can see, there are trend lines already drawn. Now there are two sets of trend line drawn here. I'm going to remove some extras. One is this upward sloping trend line, as you can see, and the other is the downward sloping trend line. Now this downward sloping trend line is meant to capture this more recent trend which started unfolding from May 21. Okay. There was a technical error that I had to pay attention to. So coming back, so this downward trend basically is what we were trying to capture for through the downward moving trend lines. However, it doesn't have any purpose anymore because the price has already gone out of its limit. So we are going to delete that, right? Okay. So this is the weekly time frame. We are moving back to the daily time frame, and on the daily time frame we see that when this price activity was happening, basically when this sideways consolidation kind of move was happening, we could see that there was a positive divergence on the daily time frame right here. Now this positive divergence was the first indication that okay, there might be something building up in Vaibhav Global. Let's go one time frame lower and see whether the opportunity is actually worthy of participation or not. So when we look at the 75-minute time frame, again a positive divergence can be noticed over there, and this was the reason why an entry here seemed pretty probable. Another thing which added weightage to the reason why I wanted to participate in the stock idea here, which I hadn't done earlier, was the volume profile. Just yesterday we did a live session in which we talked a lot about the volumes and how change in direction of volume can give an early indication of possible trend reversals or breakout confirmations. In this case, we are talking about a trend reversal. So we can clearly notice that when the price was moving up here, there was some positive movement in the volumes down here, but not moving up here in this trend. The change in volume was a lot more significant this time, which added strength to the fact that the price might be, again, this was a good opportunity for us to make fresh entries. And this is when I gave a stock idea to our swing trade plan subscribers also. Now once this position was made, the next question was where would the stop loss be. So we initiated this position with an initial stop loss somewhere below the recent low, which is this downward spike. So when you initiate a position, the first stop loss has to be significant, because when a stock is close to its low or is forming a low, it can experience some extra volatility. So when the price came and retested this low, which is marked by the green zone on the chart, when you can see the 416 target was actually achieved on the stock. Now when is the first time that we trail the stop loss? When do we start updating the stop loss? Do we update the stop loss when the price goes up immediately to 317? The answer is why? Because the key resistance level of 338, and secondly the 200 EMA on the 75-minute time frame. Until and unless at least one key resistance has been passed, changing your stop loss prematurely can lead to unnecessary exit from a good position. So here again we create this resistance, we create an alert. This, you can see the momentum here was very strong, and the volume started confirming our view on the stock even more by going higher. Volume has started to catch up with the trend. So when the price moves above this, what we are going to do, the most recent support now. So in this trend, the most recent support is again the recent low, which is this. And in this case, because the cost price is so close to us, we will take the liberty of changing our stop loss to bring it above the cost price. Now, even in the worst case scenario that the price turns, we have a high probability of exiting this position at a break-even cost. This is an example of risk management on your active trading. So now that we've ensured a break-even scenario and a high probability break-even scenario, because obviously in swing trading or in stock trading, there is always a possibility that the stock can open with a gap down below your stop loss level. It is not very uncommon, but it is also not something which should discourage you to use stop loss altogether, because it happens, but it's fairly rare. Now, the stop loss has been updated here. So as you can see, the stock continues to move, reaches the next probable resistance zone, which is this, and breaches it slightly, but then comes back down. So this is a common behavior in stocks, that it reaches the resistance and then takes a beating, comes back down lower before continuing upwards. So that is the reason why we have to make sure our stop loss is not very close, or it's not very close to the current market price. So what did we do then? Our stop loss basically lies at 311, which ensures that we have a break even on this position, but we wait for the stock to again go above the level of 368. Once the stock has gone above the level of 368, now our revised stop loss becomes the previous low, which is this recent low formed by the price fluctuation. Now our stop loss has been updated to 343. So taking a revision from the beginning, we initiated a position on, say, the 4th of August with the initial stop loss of 286, revised the stop loss to 298, followed by 313, followed by 336 or 335 roughly. Now what do we do? So stock has gone above this level, went back up, and this continues to be our stop loss. Now, because this is our stop loss and the stock has already kind of achieved the target, some of the people who chose to follow the target exited. Now, for those who failed to exit, because as you can see, the stock did not spend a lot of time at the target, it was touched merely by a spike. In such a situation, it is possible that the target does not get executed, even though there may be a standing order, because there may not be enough demand to fill the supply at that point. So what would happen is, in this situation, if the stock continues to remain open, there are two things that can be done. Number one, the stop loss can be revised to the most recent low which has been formed here, even though the stock price has not achieved or gone beyond the most recent resistance. In this situation, in this specific situation, we did not do that. What we did was we kept the stop loss unchanged at the previous level. Now, doing so, we noticed that the price almost came back down to that same level. Now, it did not trigger the stop loss. It did give an opportunity for adding more to the position, and that is what was done. However, the next time the stock went up, considering other broader assessments on the chart which indicated that the stock price may not be as strong as it was, we had to exit the position prematurely. We can clearly see in the volume profile that the stock no longer is showing high volume when the price is going up, and that is the reason the call to exit the position at the next spike was taken. And that was indeed a good decision, because we can see soon after the exit the stock did end up declining another 12%. So just because the key lesson here is, so overall on a quality basis, this was a very good entry and a very good exit, despite of the fact that from the peak price, even after achieving the target, the position for some may have lost around 12 to 13% profits. It still ended up with a very good execution of both entry and exit, considering the stock continued to fall another 12%. Now here, if somebody had let greed get the better of them, and they had thought, you know what, I'm not going to exit my position because I have seen the price visit the level of 416, maybe it will visit the price again, maybe it will visit the target of 416 again. What would have happened with them would be, they would have ended up losing the rest of the unrealized or unbooked profit on their position. So when we are doing active trading, maybe swing trading, maybe even slightly longer trading, you have to focus mainly on risk management. Doing that ensures two things. Firstly, that we at least preserve our capital even if the stock tends to go up and come back down, because we are focused on revising our stop loss to the break even cost as soon as possible, right? Number one. Number two, if the stock has gone up significantly, achieved the target, but for whatever reason not exited, our position was not exited, continuous monitoring of the position and continuous monitoring of the developments of the chart help us make a mature decision without giving in to greed or to fear. So here, if somebody would have been greedy of making back the 12% which has been potentially lost, or fearful of booking the profit too early, they would have missed out on whatever profit remained here. So we had twofold strategy in this. One, we already had a trailing position in place which would have been exited here, which would have been completely fine. Even the position that was added here, even if that was exited with a small loss, overall our position was still in profit, right? Now because we took the decision to add some more to our position when the stock corrected and came back to the trend line, we were able to book another 7% on our lost position. So think of it like this: here we lost around 18% from the top, right? But because we doubled our position here, we gained back around 7% of that position. Plus, with respect to the initial position that we had created, we added more 7% to that position, taking our overall profit to around 20%, which is fantastic. Okay, our ultimate profit is actually higher on the initial capital invested. Now, the second time that we initiated the position, again, the volume was the first giveaway that a probable uptrend is coming in, and the momentum indicator was a second confirmation. After we witnessed the stock moving above or out of the bottom, we went ahead and we created a long position here. I gave a long call to the members, and then we continued to hold it until the stop loss on this was triggered. So again, in this stock idea, in this second participation also, the way we changed our trailing stop loss was not very different from the first. The first stop loss was set at the level of approximately 287, where the previous low was used as reference for setting the stop loss. And once the most recent resistance was crossed, the stop loss was again revised to the most recent low, which in this case is 299. And here we can see the resistance is formed at this level. On 17th February, again the resistance had been breached, which means we changed our stop loss from 299 and we brought it back up to the most recent low, which is 305. Now once a new resistance has been set, we have to wait for that to breach. Once it was breached on the 28th of February, the most recent low, that is this one at 314, became our most recent low. So this is how you have to keep managing your active position, ensuring that you are using the right level for the stop loss. Of course, for a retail trader, so much analysis is not possible.